Stock market returns are never guaranteed, but when we do the research properly, there is an edge in the market. But risk management, with the help of money management and position sizing, cannot be ignored. This video is for educational purpose only. 2025 is already halfway through, and the markets have delivered a mixed bag. From gold hitting multi-year highs to Ethereum falling 25%. The first half of this year has been full of surprises. Let us decode what really happened across the global markets in first 6 months of the year and what that could mean for the rest of the year. US market snapshot. The US equity market stayed resilient in H1 2025 despite rising geopolitical tensions and volatile macro signals. S&P 500 gained 5.5% led by large cap strength. Nasdaq 100 rose by 7.93% thanks to AI-driven optimism. Dow Jones lagged a bit with just 3.64% reflective of value versus growth divergence. But surprise star, the Roundhill Ball Metaverse ETF jumped 18.64%, touching an all-time high. It is now forming a textbook rounding bottom pattern, signaling the potential breakout in H2. Europe and UK performance. Europe punched above its weight this year. FTSE 100 climbed 7.19%, supported by banking and energy stocks. DAX soared an impressive 20.09%, one of the best performing global markets driven by industrials, export data, and improving economic sentiment. Germany is clearly leading the developed world path so far. Asia Pacific market review. Asia offered a tale of three markets. Japan's Nikkei 225 managed just 1.49% with the yen weakening and inflation concerns returning. India's Nifty 50 delivered a healthy 7.92% gain, while the Sensex matched that with 7% gain. But the real headline grabber, Hong Kong's Hang Seng Index, was up by 20%, staging a massive comeback after years of underperformance. China 50, in contrast, barely moved 0.25%, showing continued investor caution. Commodities, gold, silver, and crude oil. If you were in a precious metals, you likely outperformed equities. Gold, that is XAU USD, surged by 25.87%, outperforming nearly global equity index. Silver XAG USD followed closely at plus 24.96%, benefiting from both industrial and safe haven demand. On flip side, crude oil, that is WTI crude oil, fell by 9.59% as supply concerns faded and demand moderated globally. Gold is clearly leading the 2025 asset class race so far. Crypto market check. Crypto once again showed its volatile nature. Bitcoin managed a jump of 14.78% on YTD basis, while Ethereum, that is ETH USD, dropped by 25.38%, underperforming as investor interest rotated away from altcoins. Bitcoin's outperformance was partially driven by ETF speculation and increasing institutional interest. Currencies and macro. What is fueling some of this rally in risk assets? A weak dollar, a US dollar index, that is DXY, has shown a downside of 10.97% on YTD basis. This steep fall supported both equity and commodity rallies globally. A weaker dollar often means rising gold and stronger emerging markets, exactly what we have seen. Major headlines January to June 2025. Let us remind some of the biggest headlines shaping these numbers. Number one, Trump tariff rhetoric returned in Q1, creating market turbulence, especially in China-linked stocks. Number two, geopolitical risk spiked. Israel-Iran escalations, India-Pakistan tensions, Ukraine-Russia conflict dragged on. Number 3, Federal Reserve signals pivot. A clear dovish shift in Q2 led to softening in yields and rally in the tech and metal space. Number 4, global central bank buying gold supported the gold price boom. Number 5, China's economic slowdown concerns the limited upside for Chinese equities despite stimulus attempts. Visual summary table. Let us have a look towards what we have discussed up till now. Gold XAU USD jumped by 25.87%, silver 24.96%, DAX Germany 20.09%, Seng 20%, Roundhill Ball ETF 18.64%, Bitcoin 14.78%, Nasdaq 100 7.93%, Nifty 50 7.92%, FTSE 100 7.19%, S&P 500 5.5%, Dow Jones 3.64%, Nikkei 225 1.49%, China 50 just 0.25%, WTI crude oil dipped by 9.59%, Ethereum dipped by 25.38%, and DXY US dollar index dipped by 10.97%. Conclusion and outlook. As we move into the second half of 2025, let us highlight a few takeaways. Top 3 performers during the period January to June 2025. Gold was up by 25.87%, silver up by 24.96%, DAX and Seng both above plus 20%. Worst 3 performers were Ethereum minus 25.38%, crude oil minus 9.59%, DXY, that is dollar index, dipped by 10.97%, though that helped other assets rise. Gold has decisively outperformed equities, crypto and currencies, signaling a strong risk aversion globally. What to watch in H2 2025? Will this gold rally continue or it has peaked? Can China and Japan catch up with the global equity trend? Will the Fed actually cut the rates and how will the markets react? Make sure to subscribe DK Global Market Insights and join us for weekly market insights. We simplify global markets so you can make a smarter, more informed decision. Learning never stops with DK Sinha.